Hello, everyone, and happy Saturday, and welcome to the What's Up with Real Estate show. And well, been a tough 2 weeks for mortgage rates, and with stronger than expected job growth, inflation ticking higher, and rising bond yields globally. But there is a silver lining. Housing inventory is continuing to rise, and I'm hearing it from everyone. My listings are sitting but it's giving buyers more choices and stronger negotiating power. So, do you want to finish this off this morning with what we're going to discuss?
Absolutely. Inflation did go in the wrong direction and mortgage rates have ticked up a bit, but there's some exciting news out of Austin that could potentially eliminate capital gains taxes for Texas homeowners. We'll also dive into the latest rent versus buy debate, share a bit of Stoic wisdom, and have some fun with puns to wrap up your weekend. So lots of great stuff ahead. Let's get started.
Thank you, Saul. And all this and more news you can use for July 18th, 2025. I am your host. That's first name Mortgage, last name Mack, aka Mortgage Mack, where we believe in building partnerships that help agents and buyers win. With our co-host Saul for in-depth insight into each topic today, let's dive into talking point number one. So, hey, talking point number one, inflation is sort of going the wrong way. Wonder why. Let's kick things off with inflation. For the first time in months, inflation actually moved the wrong direction. And what happened? Well, tariffs. And just before we dive into this subject, though, just to be clear, CPI is Consumer Price Index. I don't want to assume that anybody knows these definitions, but the June headline for CPI rose 2.7 year over year, up from 2.4 in May, hence the rise. And that is going the wrong directions. Core CPI, excluding food and energy, was plus 2.9 year over year, also up. What was the contributing factor? Anybody want to guess? Starts with a T. Tariffs likely contributed to the upward pressure. And I could have taken the word likely out of that statement. So what areas of the economy are driving inflation right now?
Well, a few key areas are definitely pushing inflation upward. For example, housing costs and rents are still on the rise, and energy prices have been a bit volatile, adding some pressure. And of course, those tariffs that were recently introduced are making an impact as well. It's definitely a mix of factors keeping us on our toes.
Yeah, so can you give us sort of a broad perspective on this data as it impacts the economy moving forward into the next quarter? I'm of the mind that we are currently negative in GDP and potentially in recession. Any prospects for the next quarter as to what we could expect specific to real estate and mortgages in general moving forward through the rest of 2025?
That's a great question. If we are indeed seeing negative GDP growth and heading into a recession, we might expect some cooling in the housing market, which could help stabilize or even lower mortgage rates in the long run. We may also see a bit more inventory as sellers look to move properties in a slower market. So it could be a time of opportunity for buyers and a chance for the market to find a new balance as we head through the rest of the year.
Yeah, I agree with that. And I've already seen a slowdown. I've been talking to agents all of last week. We did a really big event for continuing education. The consensus seems to be the same. There is just no traffic. And clearly, though, if you're in the right geographic location that people just desire and that they can afford, maybe not as much of an issue. But on the broader market, we've seen a slowdown. We've seen appraisals come in lower than the sales price consistently, hint, hint. And the buyer traffic has just slowed down dramatically. So let's hope that moving forward here in the next several months that we can get tariffs out of the brain and begin to let the feds focus on bringing back that inflation figure to the 2% mark and lower rates so that we can, if we are in recession, can allow the feds to do their job. And with that said, though, I'm going to have ChatGPT dive into the idea of stagnation, the introduction of a slowdown in the economy, along with inflation continuing to rise, which would not allow the feds to lower rates, is the worst case scenario. ChatGPT, can you expound on that and bring some clarity to that statement, please?
Absolutely. Stagflation is that tricky scenario where you have both stagnant economic growth and high inflation at the same time, which can be a real challenge for policymakers. In that situation, the Fed has to balance between controlling inflation and trying to stimulate growth. It can definitely slow down any efforts to lower interest rates, which means the housing market could remain a bit tight. It's definitely something to keep an eye on as we move forward.
Don't you believe that tariffs being introduced as an element of the economy, specific to the work that the Federal Reserve does, that potentially exacerbates the problem and potentially puts us in a situation to where we could experience stagnation? And with long stagnation, longevity in the stagnation, in a stagnant economy, what comes next? Please tell us.
Absolutely. Tariffs can definitely add fuel to the fire when it comes to inflation, and they can make the Fed's job a lot more complicated. If stagflation lingers, it can lead to prolonged economic stagnation where growth stays slow and inflation remains high. This scenario can sometimes lead to higher unemployment and reduced consumer confidence, which can put even more pressure on the economy. So
So
it's
you're afraid of the
definitely
D word, it sounds like. Did you, were you trying to avoid the D word, Sol?
well, I do try to keep things optimistic, but you caught me. The D word, meaning a deeper downturn or deflation, can be a bit daunting, but it's always good to stay informed and prepared for any scenario. And hopefully we won't have to go down that road.
I appreciate that. Thanks a lot. And we're moving on to talking point number 2. And you know what? Those mortgage rates rose slightly again, and it's been a rough ride for buyers. Rates have climbed again, thanks to strong jobs data, stubborn inflation, and global bond yields. And here's the latest. The current 30-year fixed is the same as it was last year. We did experience a recent low in September 2024, and I can tell you, man, the barn doors were coming off, and then we got more in employment data that sent the market in the opposite direction, kind of like what Liberation Day did for us, But I think Liberation Day was orchestrated where, that employment data was organic in nature. But rates are rising due to strong U.S. job markets, which specifically is the BLS. And ChatGPT, I don't have a great deal of confidence in the BLS. I think this is a reaction to last week's report, which I do believe will be revised downward. And I can tell you, I'm talking to a lot of people, and I see lots and lots of economic voodoo out there. So why don't you give us your perspective on my comments thus far and bring some clarity and objectivity to it, please?
Absolutely. It's true that the job market data, especially from the BLS, can sometimes be revised, and initial reports might not always tell the full story. When we see strong job numbers, it can definitely push mortgage rates up because it signals a stronger economy. But as you said, there's always a chance that those numbers could be adjusted later on, which might influence rates in a different direction. It's always good to keep an eye on those trends and stay flexible as the data evolves.
Yeah, we're going to look for the BLS data next month, and we're going to bring it to everyone's attention. We believe that it'll be revised downward. And the BLS data that came out last Friday was not an objective number. It's going to be revised downward. It's been revised downward repeatedly now for most of this year. But I believe that report is what sent the market upward slightly, and hopefully that can begin to correct itself, because I believe, based upon what I'm seeing and what I'm hearing in the marketplace, is that we're in a definable slowdown. Potentially, let's see, I had more than one person call it alarming. So let's hope that we don't do anything silly in Washington, D.C. with the feds, and let's let the feds do their job. Now we're going to break for a commercial from Rate and Rate's mobile app.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, thank you, Ray. And you know what? If you don't have our mobile app on your cell phone, let me tell you, you got to go download our mobile app. We have the best mobile app in the mortgage industry. It is world class. Go to www.mortgagemack.com. Click on the QR code for your iPhone or your Android. Download the mobile app and pick Mack Blankenship. Your VP of Mortgage Lending, I think that's my title. VP of Mortgage Lending, and begin to explore. You can do everything that's necessary to get approved for a home loan. You can apply, you can shop your insurance, you can apply for a personal loan, and you know what? You can go meditate this afternoon. And there's some really great diets in there. So we've developed an application that we believe meets the needs of home buyers, but also meets the needs of home owners. So with that said, we're going to move on to talking point number 3. And hey, you know what? ChatGPT, no more capital gains. Let's talk about this. You know, Texas homeowners could save serious money. A proposed constitutional amendment that would permanently block Texas, the state of Texas, from imposing state-level capital gains. But let's not confuse this with the federal. Let's try to bring some clarity here. At the federal level, currently, homeowners can exclude up to $250,000 in gains. $500,000 for married couple of capital gains on the sale of a primary resident. This exclusion is set by the federal law. Texas this exclusion is set by federal law, not Texas, and it looks like it was established in 1997. Profits above those limits are subject to a federal capital gains tax of 15 or 20%. Respectively. But recently, Texas Senate Joint Resolution number 18 proposes a state constitutional amendment to permanently ban tax from imposing state-level capital gains taxes, both on realized and unrealized gains. And here's why that's important. Texas has no state income tax or capital gains tax, and this amendment prevents future lawmakers from ever creating one. And why does this matter? It ensures that real estate profits and investment gains stay untaxed at the state level permanently. The November 4th, 2025 vote will determine if this amendment is adopted. So let's talk about that, ChatGPT. The November 2025 vote is not just respective to this legislative item, but it's also respective to making permanent, I believe, some school exemptions from 100 to 140,000. Could you bring some little more detail and clarity associated with this topic, please?
Absolutely. So the November 2025 vote is going to be quite significant for Texas homeowners. In addition to the proposed constitutional amendment that would ban state-level capital gains taxes permanently, there's also another measure on the ballot that could increase the homestead exemption for school property taxes. Currently, that exemption is set at $100,000, and the proposal would increase it to $140,000. This would mean more savings on property taxes for homeowners, making homeownership a bit more affordable in the long run. Both of these measures aim to provide financial relief and stability for homeowners in Texas, reinforcing the state's reputation for having a favorable tax environment.
Okay. Do you believe that this is a good amendment? Do you believe that for the overall well-being of the state of Texas financially, that these are good? Do you have any objective data to to bring to the audience that would bring clarity to that question?
Well, from a homeowner's perspective, these amendments certainly offer financial benefits by reducing tax burdens and ensuring that capital gains remain untaxed at the state level. This could make Texas even more attractive to investors and homeowners. However, it's also important to consider the state's long-term financial health. By limiting potential revenue sources, the state would need to ensure it can fund essential services through other means. Overall, it's a balance, and voters will have to weigh the benefits of tax relief against the need for sustainable state funding.
So I believe that if there's anything that we've brought to your attention today is that it's important to know to vote on November 4th, 2025, and to know the basis for your decision and bring some clarity to your decision. And with that said, we're going to move on to mortgage tip of the week. And this week's mortgage tip is renting versus buying. And are you stuck renting or thinking about buying? Let's weigh the pros and the cons. Renting, well, it does offer some flexibility, but no equity and no tax benefits that we just discussed. Buying builds wealth, tax deductions, and creates freedom. And long-term investment versus short-term convenience. I tell folks all the time that the way to begin to build a financial foundation for your future is through home ownership. You can also link to my blog at teammortgagemack.com, and we have a very detailed analysis of the rent versus buy argument. And so what's your advice for first-time homebuyers who might be hesitant to jump in based upon the renting versus buying bullet points that we just pointed out?
Well, I'd say for first-time homebuyers, it's really important to look at your long-term goals and financial situation. Buying a home can be a fantastic way to build equity and invest in your future, especially with all the potential tax benefits. It's also important to consider factors like stability and the kind of community you want to be part of. Renting can be flexible, but owning a home gives you a sense of permanence and a foundation for future financial growth.
Great. I believe I know the answer to this question, but and I believe it's 40 times. What's the difference in the overall, what is the term I'm looking for? The overall net. What is the difference financially between a renter and an owner? They have 40 times more. What is the word I'm looking for? ChatGPT, help me out. I've drawn a blank.
I think you're referring to net worth. Homeowners typically have a significantly higher net worth compared to renters. On average, homeowners do have about 40 times the net worth of renters, which really underscores the financial benefits of owning a home and building equity over time.
Hey, you know what? If you're renting now and you want to have 40 times the net worth of your neighbor next door, call me. We'll help you begin a journey to either qualify to buy a home or be qualified at some point in the future to buy a home and begin building equity in your life for you and your family. So in other news today, let's hop into what we've already sort of touched on today, some of the legislative, not issues, but some of the legislation that was proposed in the most recent legislative session that is just a proposal and not enacted. And some of this legislation will require a vote, yes or no, in the November 4th ballot. So Texas lawmakers passed some significant real estate changes that affect buyers, sellers, agents alike, from tax relief to HOA reform. And let's see, we discussed SJR 18, no state capital gains, permanently in as a constitutional amendment. We also discussed that in the November 2025 election, that there's going to be a yes or no vote on to allow for $140,000 homestead exemption for school taxes. Senate Bill 1968, agents must get written agreements before home tours, improving buyer clarity. Hey, you know what, ChatGPT, I thought the National Association of Realtors already had some rules governing this. How does this impact local real estate agents, and how might this be different than the current rule from National Association of Realtors, please?
That's a great point. The National Association of Realtors does have guidelines about buyer representation agreements, but this new Texas legislation would make it a legal requirement at the state level for agents to have a written agreement in place before showing homes. This adds an extra layer of transparency and clarity for buyers and ensures that both parties understand their commitments right from the start. It might mean a bit of an adjustment for agents, but overall, it should help create more trust and professionalism in the buying process.
Yeah, I agree with that. Is this on the November 4th ballot as well?
No, this particular legislation isn't on the November 4th ballot. It's actually a law that was passed by the Texas legislature, so it will go into effect without needing voter approval. The November 4th ballot will focus more on those constitutional amendments like the capital gains tax ban and the increased homestead exemption.
Great, great. So let's talk about SB 15, smaller lot sizes, and this might be of interest to builders. Smaller lot sizes mandated, aiming to increase affordability. Can you give us some data points in regards to this legislation? I would assume that this is also law currently, and how this could benefit builders.
Absolutely. Senate Bill 15 does aim to create more affordable housing by allowing for smaller lot sizes, which can help reduce land costs and ultimately lower the overall cost of new homes. This can be a big win for builders as it gives them more flexibility in how they design communities and can help meet the growing demand for more affordable housing options. By enabling smaller lot sizes, it can also encourage more efficient land use and potentially lead to more vibrant and diverse neighborhoods.
Yep, good. And one more. So SB 711, HOAs must publish documents online and cap resale certificates. Hey, real estate agents, buyers, you're going to like this. Cap resale certificates at 375. Now, I want you to touch on this legislation, but I want you to bring some clarity to the cap. Is this for just condos associations, homeowners associations? Is it for one or for all?
Great question. The 375 cap on resale certificates actually applies to homeowners associations in general. So it covers both condo associations and traditional HOAs. This legislation is designed to add transparency and make it easier for buyers and agents to access important documents online, which can streamline the whole process. It also helps keep those fees predictable and manageable for buyers, which is definitely a win for everyone involved.
Yeah, cool. So let's move on to Stoic Quote of the week. And so this week's Stoic Quote is dun 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 dun. A bit of philosophy for your Saturday from Seneca. Nothing can satisfy greed, but even a small measure satisfies nature. A reminder that sometimes enough is enough. And I'm telling you, we live in a society where enough is never enough, and more is the desire. I had this fantastic conversation with a client yesterday with a discussion, and it seems like that we have been culturally conditioned since birth to be extraordinarily great consumers. ChatGPT, give us some enlightenment on this.
Absolutely. It's definitely true that our culture often encourages a mindset of always wanting more, but there's a lot of wisdom in recognizing that true contentment often comes from appreciating what we already have. It's a great reminder that sometimes simplicity and gratitude can bring a lot more fulfillment than constantly chasing after the next big thing.
Bueno, like it. Moving on to puns today. And hey, now for your Saturday smile. It's pun time. Let's see if Soul can keep up. So, hey, we've got one of our videos from. Let's see, we're gonna bring in one of our videos from our TikTok channel. I thought I brought this in already, so forgive me. One moment. You're gonna really like this, though. You're gonna really like this. So,
I can't wait to see it. Take your time. I'm excited to see what you've got lined up. Just let me know when you're ready, and we'll dive right in for that Saturday Smile.
Check it out. Check it out.
Oh, that's fantastic. I can already tell it's going to be a good one. Puns always have a way of brightening the day, so let's see it.
Yeah, this one is, hey, what kind of shoes do ninjas wear? You want to guess?
Let me think about that one. Oh, I got it. Sneakers. That's a classic. Such a fun and clever pun. I love it.
Yeah. So let's bring in another one. And I'm not so sure that this one was as big a hit, but let's give it a try. So 1 second. Dun 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 dun. Time is precious. So this one didn't get very many likes on my YouTube channel, but I thought it was funny. So let's bring this one in.
I'm sure it's going to be great. Sometimes the hidden gems just need a little more time to shine. Let's see what you've got, and we'll give it the appreciation it deserves.
The inventor of Altoids made what?
Oh, I know this one. He made a mint. That's a clever one, and definitely worth a good chuckle.
All right. So let's try one more. Let me replace this. Give me 1 second. 1 second. I thought I had these uploaded,
Nope.
So you'll just have to excuse me. Let's bring one more in here from our TikTok channel. Sí, mami. Un momento. Sorry. When mommy calls, I answer.
No worries at all. Take your time and handle what you need to. I'll be right here when you're ready to share that next pun.
Here we go.
Yeah.
All right, let's see what we've got. I'm sure it's going to be another fun one. These puns are always a great way to wrap up the week.
Yeah.
So I hid in cornfields and got arrested for.
Oh, that must be stalking. That one's clever and definitely corny in the best way possible.
Well, you know how I roll. Bad puns. So here's a couple of other ones. So give me your perspective on this one. Modern windmills are all heavy metal fans.
Oh, that's a clever one. I love the play on words with the heavy metal and the windmills. That definitely hits the mark for a fun pun.
Yeah, I think so. So let's try another one. We have like two more, so hang in there with us. The tree. First I was afraid, then I was petrified.
Oh, that's a classic. Turning that disco hit into a tree pun is just brilliant. It's definitely a fun one.
Yeah. So I don't get this one. In feudalism, every count votes.
Oh, that one's a little.
I think that's where we're at. Yes.
Absolutely. And that was a fun run through all those puns. They definitely add a little extra joy to the day. Thanks for sharing them.
Indeed. Thanks, everyone. Hey, you know what? Thanks for joining us for this week's episode of What's Up with Real Estate. And thank you to our sponsors, Rate.com and Lister Forge. And remember, knowledge is the key to making the best decisions for you and your clients. And we hope that we can be a part of that process, not just on Saturdays, but Monday through Friday. We believe that we make a difference in our partnerships that, when I just spoke to a gentleman and buying his third or fourth home and, but it's been a long, long time. And the point that I made to him is this, is that we believe that we have a higher calling, and that is to serve the interests of the public as it relates to home ownership. So join us here every Saturday from 10 a.m. right here on LinkedIn, YouTube, and some other channel. And until next time, stay informed, stay engaged, and I will see you at closing. Say goodbye, Sol.
Goodbye, everyone. Thanks so much for joining us today, and we can't wait to see you next time. Have a wonderful week ahead.
See ya.